that to touch the top right there. Get this to touch the top. Just kind of want to get as accurate of a reading as possible. And then look, pink. Alright, pink. So now we have a nice kind of a cleaner understanding of what's going to be going down. And so we'll continue. I was just doing this to show this area, but I will extend this out just to have the space here to the right. So we go down in timeline to the 1 minute, and we start setting up additional trend lines. So let's zoom out. Dun, 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 dun. Okay. Let's go back to the 15 minute because this is pretty close up. And what I want is, so we have this. So I'm just going to remember that these are here. And we have this, which got screwed up. This got screwed up. Where is this piece? Right here. Right there. Now you can use these zones too. Right? You can pick different ones. And as you pick different points, when it starts to match up, because mind you, these are just showing resistance areas. So as long as, if you can just focus on the lines and what area are you getting kind of the correct readouts on. So like even if we came up here and used the bottom of the blue line here, so now we have kind of like these squeeze areas. So you can play with this to where you have a cleaner idea of where these resistance zones are to get more definite readings. So if I use the bottom of this instead from the blue zone, I'm also getting the top of this, and then look at, you kind of get these smaller squeeze areas here, right, where there's consolidation, and you can see these resistance areas. So you can help make the line make sense just by adjusting it. And so it doesn't have to be very specifically a certain way, as long as you get the lines, because the lines are here to just remind you what's going to happen. So if I have these details of these squeeze areas, and as I have more lines, as you can see, we have greater consolidation zones. We have more lines in this area. As I move this out, oops, and you can see that the consolidation zones are where there are a majority of the lines. We have a bunch of lines right here, and these are smaller areas. We have a bunch of lines right here, and we get all these bounces right here. So you'll start seeing that. And so kind of what happens before generally will start to happen again. So as we get into these bigger areas, like we have bigger drops. Bigger areas, bigger drops. So it really helps remind you as to what's possible or what's going to be happening. So when this starts coming back down, we're probably going to be doing a little bit of bouncing back and forth until it breaks this zone here, where we start seeing the other drops happen, the other, and so yeah, same thing with the pushes up too. So, and then until it gets past this green line of this blue area, and then we start getting consolidation again. So right here, boom, so we start getting these kind of points. Now, there are going to be areas where you still get that, but it's just these lines are here to remind you when you're not looking at it, or if you're on a smaller time frame. As we trade and look for our entries on the minute, we trade off the 15, but look for our entries on the minute. And as we're in a smaller time frame, we'll get reminded that, oh, okay, there's multiple lines here. We're probably going to get squeezed, right? And so let's go back to the 15 minute and let's get some more trend lines going. So what I want to see is we're going to go from this high point to this high point here. This could be technically a high right now. We can draw one from here. I like to use my top lines as red. Excuse me. Use my top lines as red. And then I like to do my bottom lines. So I draw these lines as blue. And so we're going to pick this zone right here. Okay, and then we have kind of a trend going up this way, so we'll do this one as well, and boom. And so you can kind of see just from these trend lines that there's a squeeze happening in this area, right? And if we do another one here from this top to this top, it's just that added squeeze, right? So I kind of like to think of these as downward pressure or selling pressure, and I use these as buying or upward bearish pressure or bullish pressure. And a lot of the times they'll respect these areas. I'm gonna go ahead and get rid of this one, but I want to keep it just because we already have said that we think it's going to come back down. So as it comes back down, it will most likely bounce off of this line a little bit. Mind you, this is all these lines are reminders of previous zones. So it'll probably bounce off of this area a little bit, but generally if it breaks through this blue line, it's going to start making its way down to whatever the next line or zone is, right? So we have our midway major 4-hour trend line, and then we have the smaller trend line. So these are harder to break generally. As you can see, it had to touch a few times, come back here. This had to touch a couple times, and then before it actually breaks through. So same thing as we go back. It has to hit it a few times, and then it gets the opportunity to break through. So we're going to do that again here. So I think we have enough lines for now. Let's go down to the 1 minute and see if there's any more that we need to add. But I think we should be good. Okay. And then we're just going to go ahead and just add this area here, just to give another idea. And as this moves down, or if it moves down, I should say, I will probably, we can even add this one here, right? But I want to get more of a separate ideology. I don't want too many lines just kind of right next to each other of where these zones are. So as it breaks through this line, we'll start to see it probably try to come, do what it did over here, consolidate a little bit before as it tries to break through, and then possibly come down to this area, which is also our untested support, right? What else do we have all the way down here? Untested support. So the main way that we trade is we can't perfectly predict when it's going to come hit these areas, but you take your risk assessment based off of the trades you go in, or what are the having that awareness that it's going to come back and test untested support and resistance areas, and when is the likelihood that will happen? Well, we're in a higher likelihood that it's going to come back because it's bouncing off a previous untested resistance area. And we have a stack of markers right here, and when you stack markers high enough, eventually that stack of markers is going to fall over. You don't have enough of a foundation for the building to stay structured. It's going to tip and fall over until it creates a better foundation for it to rise. So as this widens out, we have a stronger and stronger foundation for the next big movement. Also, this type of movement, these step-ups are generally healthier movement that allow it to keep coming up. If you have these straight movements like we see on gold on the 1 day, where it's just this straight line up, that's not healthy, right? This is not healthy, and we're expecting gold at some point to tip and fall over. As we're getting also these big wicks at the top, we're getting huge reversal wicks starting all the way up. When we have a majority where there's smaller wicks on the bottom and bigger wicks on top, people are trying to push this down. You see this big wick on top, boom, 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 boom. So you'll notice on these wicks, when the majority is trying to buy, you have bigger wicks on the bottom, right? And then as the majority,
Watch this run, bud.
what? So, so we're expecting gold to come back and retest this area at some point. Gold will collapse at some point. And let's go back to NQ. Got our lines up. And so now what we're waiting for is a break of this high, this zone, figure out what it's going to do. See as the candles start getting smaller and smaller as we get into this area. It's getting squeezed, 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 squeezed. So it's going to have to make a decision here pretty soon because it's at this crossroad where it's going to be stuck. So I'll put this right on the top of here so we can get a better idea, but it's getting stuck. So if we look at the wicks now, what are we seeing? See big wicks on the top here, wicks here. There's no wicks on the bottom, as small as they are, and people are kind of being indecisive, but I'm seeing longer wicks on top and a majority probably on top. There's none on the bottom, right? And so it looks like, and then even right here, big pushes down, none on the bottom, right? So a majority is starting to push and try to bring this price down, and the demand is now going to be back down here in these areas. So there's no supply up here anymore, and and it's gotten too expensive to buy. But it's a great price to sell. It's a very cheap price to sell and short, and it's getting too expensive to buy. That's what this is telling us. So, and as it breaks this through this zone, what we're going to be waiting for, it's going to break through this zone, and we want it to break this low. As it breaks this low, we don't have the immediate support for it to reject and bounce back up. The next level is just these zones here, previous zones here, but there's not enough for it. So it'll come down and then probably bounce off of these tops a little bit and then keep coming down. Maybe jump back up, retest the zone, and then keep coming back down all the way down to these areas till it creates that third bounce that we're looking for. And possibly just above or right on this golden line. If I were to guess, I'd draw a circle right here in this area, right off of this zone, if I had to guess. And that's how we do that.